Hello, everybody, and welcome. For those who don't know me, I'm Donald Potty, the Managing Director of 80 Potty Chartered Accountants, and this is another of our videos that we're doing to help support our clients and others through the current pandemic. Today, I want to talk about the Corona Business Interruption Loan Scheme, and I'm very happy to welcome Andrew Vance from AJV Business Services here. So Andrew, welcome, and would you like to tell us a little bit about yourself?
Thanks, Donald. Thank you very much for the introduction. Yes, my name is Andrew Vance. I'm the Director of AJV Business Services Limited. We're a commercial finance brokerage in Newtonabbey, just outside Belfast. I've been running the business for the last 7 years. Prior to that, I worked in a couple of major banks over here for over 15 years, 8 of which I was a business bank manager. So dealing with businesses every day and their financial requirements. Now we look at the whole of the market for businesses, but primarily, obviously, it was pre-COVID. Now we're in the COVID pandemic scenario, so it's COVID as well. So we're looking at opportunities to help our customers during these uncertain times.
Very good. And we're here today to talk to people about the opportunities that's there with the CBILS Business Interruption Loan Scheme. And I think I've had a number of inquiries, and I think there's an opportunity there that's not always being taken up when it should be. So Andrew, would you like to tell us what a CBILS is?
Okay, as Donald alluded to, a CBILS is a Coronavirus Business Interruption Loan Scheme. It's a loan supported by the government to help businesses during the pandemic. So if you have either been affected by COVID and either have a working capital requirement or actually have a business expansion growth opportunity, you can potentially apply for a CBILS. The minimum amount you can apply for is £50,000, and it's capped at £5 million. Now this is based on 25% of your turnover. But it's not just based on that, it's based on affordability as well. So we will have a look with the lender at your accounts, your bank statements, what you need the money for, make sure you can afford it, and then you should be successful with your application. Now, the difference between that and a bounce back loan, which you've probably heard of, lots of businesses were able to get the £50,000 bounce back loan. The bounce back loan wasn't assessed for affordability. It was given out by the government to help businesses who were in distress because of the pandemic. Lots of businesses were shut down during lockdown, and you only had to meet a couple of bits of criteria. Were you affected by COVID? You weren't in financial difficulty at the end of December 19. Most businesses ticked those boxes and got their 50 grand. And now what I would say is, if you apply for a CBILS and you're successful and you previously had a bounce back, you can't have both. So you would have to pay your £50,000 bounce back off, not before you get the loan. So don't worry, you won't be down that money. You'll be doing it after you received your CBILS facility.
So if I have clients that have maybe nearly 9-10 months of bounce back, and they're looking at the repayments having to start, is that an opportunity to extend their interest-free loan by a further 12
Absolutely,
months?
Absolutely. If you pay back your bounce back this month or next month, well then the clock starts from now. You potentially have another 12 months of interest-free money to help support your business during these tough times.
Yeah. So that's one of the opportunities there. It's an extension of the bounce back.
Absolutely, it is indeed, yes.
As you say, you can't have both. But am I right in understanding then that if you had say you have a £1 million turnover business, if you had and you have a £50,000 bounce back loan, you can take out 25% of a million, £250,000 of a CBILS.
Yes.
Pay back your loan and your bounce back loan, and you still have 200,000 extra in your account to do what you want with.
Absolutely, that's correct. But what is even better with regard to the CBILS is, say for example, your business turned over £2 million, you could potentially apply for 500,000. Now, if you applied for 500,000 with one lender, anything over 250,000, and the lender will be looking for a personal guarantee. However, working with ourselves, because we have a panel of alternative lenders, we could apply for 250,000 with 2 different lenders, which means that you're still getting 500,000, but you have no personal guarantees to sign, which so it reduces the risk to you as the business owner.
So you have a panel of lenders then. So would my clients be better going to one of your panel or going to their own bank?
Well, if you went to your own bank for a CBILS, they may be able to assist you. However, they'll look at the overall exposure that your business has with that institution. And so say, for example, you had a £100,000 overdraft with your lender,
Yeah.
and then you went for a CBILS and got 250. Your exposure could be 350,000. Your lender might be uncomfortable with the amount of exposure and may say, look, we'll give you the CBILS, however, we want the overdraft back, which really doesn't help you, because the reason you have the overdraft is just in case you need it. So it kind of reduces your liquidity in your business.
So you're better to spread the risk.
Absolutely. If you had it with an alternative lender, when the money comes in, you've got the use of the cash, but the exposure is in with your incumbent bank.
And another thing that my clients are always very interested in is the costs and interest rates and fees and things like that. And of course, the security you mentioned, personal guarantees, if it's over $250,000. So obviously you'd rather do 2 than a bigger one.
Absolutely. With regard to the fees and costs, the good news is the interest is covered for the first 12 months by the government. Not very often does that happen. This is a literally once in a lifetime opportunity. Of course, we don't want to be in this position because of COVID. However, we need to maximize any support we can get. With regard to the costs, with me setting it up, the government also pay me for doing it. So there's no setup fees or anything, which is great. And then if you compare the alternative lenders to the bank, the costs are pretty competitive. I will caveat that it's down to your credit risk of your business, risk versus reward. If you're a higher risk business with your lower credit score, there may be a slightly more expensive cost associated, but that would be the same with your bank as well.
Yeah. But you still have your interest free 12 months.
Oh, absolutely. So say, for example, you took 250,000 to have it as a buffer as such, just in case you needed it. You could use the money in and out, and in 12 months' time, you could pay it back in full with no interest charge or cost whatsoever. So you've got the use of the money interest free.
So you could have it as a safety net, and if an opportunity came up, you could take advantage of the opportunity, or not, as you whatever you decided. But that opportunity, that cash reserve, that safety net, is there for you for the next 12 months.
Absolutely, yes, that's correct.
And how long is this scheme available for? Is it going to close? Are there deadlines that we need to be aware of?
The deadline at the moment is the 31st of March. And at the moment, my lenders are pretty busy with applications. So it would take 7 to 10 days to process an application from start to finish. So if you're interested in a CBILS, I would say get your application in today. So to apply, we need 2 years financial accounts, 6 months business bank statements, and dates of birth and 3 years address history for any directors / shareholders over 20% ownership of the business.
So if somebody was interested, they would need to contact us very soon rather
Absolutely.
than leave for a month or so.
Yeah, definitely, because you don't know when the schemes could close and you want to get in. You don't want to, and whether the scheme closes or not, if the lenders get too busy, you know, sometimes, like for example, the bounce backs, some lenders couldn't process the number of applications they had because they're too many. So if you're interested in this scheme, you need to get in today.
Okay, yeah, that's important. And obviously, you're an expert. You've your area of expertise. Why would somebody come to you rather than go to their own bank? I
suppose it's about presenting the story correctly, and it's not a story. It's just presenting what you want. You know, lenders want a proposition in a certain way, and coming from someone like me who does it every day of the week, we know what we're talking about. We know how to. You've only one goal. So look, if I just recap that. So lenders want an application presented in a certain way. If we
Yeah.
present it properly, they'll assess it more quickly and more than likely give you the favourable result that you're looking for.
So
If you go yourself, you could inadvertently say the wrong thing and potentially be declined.
yeah, and that would make it more difficult to go to another one if you're declined in the first one, obviously.
It doesn't help. And because we deal with the lenders, we know what lenders like certain sectors. You know, a lender might like your sector, and another lender may be happy with it. So it's all about presentation and preparation and how you present the application to the lender.
Okay. So, and as I say, it's something that I've had a lot of inquiries about. There seems to be a lot of opportunities, and it would be a shame to miss it, even if it's only to take it out for the 12 months and let the money sit there. Are there any downsides in taking a CBILS out, having the money there for 12 months, and with the intention of paying it back? Are there any downsides in having that?
Not really that I can see. You know, I mean, you've got to be sensible with the money if you want to make an opportunity. It's like any business decision you make. If you take the money out and you see an opportunity to make money, just assess it as you normally would. Is there a return in it? Is there a margin in it? What's the risk in it for you to do that transaction? But no, cash is king, as lots of businesses will tell you. And if you have the cash sitting there, you have the ability to do more deals and potentially make more money for your business.
And there are opportunities out there if you have the cash available. There are opportunities there that if the thing ends in March, may not be there again. And if there's no downside really in having the money sitting in your bank account as opposed to whatever, you might as well have it.
Absolutely. It's definitely a great opportunity to help businesses shore up their balance sheet and their cash position.
And I have your website on the screen here. So if anybody wants to contact you, did they just ring this number?
You ring that number or send an email, yes.
Or there's an email there. Or if anybody wants to contact us, there's our email and telephone contact details as well.
That's perfect.
So is there anything else that we need to?
No, I don't think so. I just think that if you're really considering applying for a CBILS, it's not going to cost you any money. Yeah. I think in conclusion, if you're thinking of applying for a CBILS, it's not going to cost you any money to do so. If you get this through in the offer letter there in front of you, why not take it? It gives you an opportunity, you know, to have more cash, you know, to use in your business. And if you decide in 3 months' time that you don't need it, you can pay it back.
Right. And in these uncertain times, we just don't know. Hopefully things are going to open up, but we don't really know. And to have a bit of extra cash on demand or whatever for the next 12 months, I think it's a sensible thing to do. Would you agree?
Absolutely, yes.
Yes. So thank you very much. That was very informative. And so if anybody wants to contact either myself on this number or Andrew on his website is ajvservices.co.uk. There's his telephone number and his email address. So thank you very much for watching.
It's great. Thank you very much for your time. Bye now.
Thank you. Bye-bye.